All right, let's dive right in. Today, we're going to break down a really straightforward strategy for trading Bitcoin. If you've ever felt lost in all the noise and the wild price swings, this is for you. We're talking about a clear, rules-based approach that brings some sanity to the chaos. So let's get to it.
I mean, let's be real for a second. Looking at a Bitcoin chart can sometimes feel like you're trying to predict an earthquake, right? The price just whips up and down, and it can make trading feel like you're just gambling. But what if there was a way to filter out all that noise? A system with a clear set of rules that could bring some actual order to that chaos?
Well, that's exactly what this strategy is designed to do. It's a framework built for discipline, specifically for swing trading. So we're talking about holding positions for a few hours, maybe a couple of days, and it's perfect for those 1 hour and 4 hour charts. The whole idea is to catch those nice, meaty, medium-term moves, not to get chopped up by every little 5-minute flicker. So, how do we pull this off? Well, the entire system is actually built on just 4 simple tools. Before we get into the rules, we've got to understand our toolkit. So let's break down each one.
The first up is the 50 EMA. Think of this as our short-term trend guide. It follows the recent price pretty closely, and it's going to act as a dynamic level, almost like a moving magnet, where we'll be looking for price to react.
And next, we have its bigger, much slower cousin, the 200 EMA. This is the big one. This is our long-term trend filter. You know, if the 50 EMA is like a speedboat zipping around, the 200 EMA is like a giant cargo ship. It shows you the deep underlying current of the market. And listen, here's probably the most important rule of this whole thing. We never trade against this current. Ever. Why? Because trading with the big trend is the single easiest way to put the odds in your favor.
Okay, our third tool is the RSI, or the Relative Strength Index. This thing is our momentum meter. It basically tells us if Bitcoin has moved too far, too fast, and is getting a little tired. You know, becoming overbought or oversold. We don't use this to find the trend. We use it to time our entries. It's that final check that tells us, okay, now might be a good time to pull the trigger.
And finally, good old support and resistance zones. These are just the historical price levels where buyers or sellers have really stepped in before. Think of them as the key landmarks on our trading map. They tell us exactly where to expect a potential reaction and help us be super precise with our entries and our exits. All right, so we've got our tools laid out. Now let's get into the fun part, the actual step-by-step rules of engagement. This is the core process. This is how we find a high probability trade. Step 1 is without a doubt the most critical rule of them all. Figure out the trend. And it's incredibly simple. If our fast 50 EMA is above the slow 200 EMA, we're in an uptrend. That means we are only looking for buy setups, period. And if the 50 is below the 200, it's a downtrend, and we are only looking to sell. That's it. We always swim in the direction of that main current. Step 2, let's prep the battlefield. You're just going to look back over the last week or so, maybe 10 days, and draw in the really obvious horizontal zones where price has either hit a ceiling or found a floor. These levels are where the big decisions were made in the past, and they're very likely to be important again.
Okay, now for the entry. And what's so cool here is that the rules for a buy and a sell are just perfect mirror images of each other. So for a buy setup, we're already in an uptrend, right? We wait for the price to pull back to one of our support zones, and we want to see it bounce right off our 50 EMA. At the same time, we glance down at our RSI and confirm it's in that oversold area. For a sell, it's the exact opposite. Now here's the final piece, our trigger. We wait for a confirmation candle to close, and we enter only when the next candle breaks its high for a buy or breaks its low for a sell. That's what gets us in the trade. Look, finding a great entry is awesome, but it's only half the story. A winning strategy is absolutely worthless without solid risk management. So this next part covers the rules that are going to protect your account and actually make sure you get paid for the risks you're taking.
Setting your stop loss is super straightforward with this method. If you're in a buy trade, your stop loss goes just below that support zone that price bounced from. If you're in a sell trade, it goes just above the resistance zone. This gives you a crystal clear point on the chart where you know your idea was wrong. You know exactly what you stand to lose before you even click the button. So how much are we actually risking? Well, when you place your stop like that, it typically works out to about a 1.2 to 2% risk from your entry point. Honestly, for a Bitcoin swing trade, that is a very, very manageable level of risk. And this right here is the mathematical engine of any winning strategy. We only take trades where the potential reward is at least 2 times bigger than our potential risk. A 1 to 2 risk to reward ratio.
That means if you risk $100, you have to have a realistic shot at making at least $200. This is non-negotiable.
And believe me, the reward potential is there. With Bitcoin's volatility, a swing move of 2, 4, or even 6% is pretty common. So think about it. If you're risking just 1.5%, a simple 3% move already gets you to your 1 to 2 target. That's what makes these setups so powerful.
Okay, theory is great, but seeing it all come together on a real chart is what really makes it click. So let's walk through a picture-perfect setup, step by step, and see how all these pieces work in harmony.
Okay, check out this beautiful buy setup. First thing we see, the trend is clearly up. Our 50 EMA is way above the 200. Perfect. Then, watch as the price pulls back and gives a perfect little kiss to the 50 EMA right at a known support zone. At that exact moment, we look down and yep, the RSI is confirming the market's oversold. Then a nice bullish candle forms, and as soon as the very next candle breaks above that high, bam, that's our trigger to buy. We tuck our stop loss safely below that low, and we aim to the next major resistance level for a clean take profit. It's just textbook.
And that's really the whole thing. When you see every single one of these conditions line up perfectly, it's not guessing anymore. It's a clean, high-probability setup. This strategy isn't about trading all the time. It's about having the patience and the discipline to wait for these A-plus opportunities to come to you.
So there you have it, the framework, the tools, the rules. It's a complete system designed to bring discipline to your trading. The only question left is how are you going to take this and apply it to your own analysis?